Hello, today we are going to solve May 2023 paper question number 4, part C. Prepare the statement of profit and loss and other comprehensive income for the year ended 30th April 2023. So this is a question of incomplete records where Anaya is not maintaining her book of accounts, and now we have to prepare the profit and loss using some transactions which she has noted. Okay, so let's have a look at all of this. The first one is the revenue calculation. So she purchased, okay, she sold 450 water coolers were sold in the year. Of these, 300 were sold at the full retail price of 300 pounds. 100 was sold at a trade discount of 15% and 50 were sold at a trade discount of 25%. So let's calculate the revenue for the same. So the revenue is going to be equal to, so the total number of units purchased was 450 units were purchased. So out of that we can see that 300, okay, was sold at the price of 300 pounds. The rest 100, okay, the rest 100 was sold at a discount of, it was not sold at 300, they gave a trade discount, and this was around 15%. So minus 15 percentage of 300, okay, 15 percentage of 300. So then we have, then the rest 50, okay, the rest 50 was sold, units was sold at a trade discount of how much? So 300 minus 25 percentage of 300. So it was sold at giving 25% discount. So if you calculate, the total value sold was 126,750. Okay, so this was the value of the revenue they earned. So let's record this, 126,750. Then we have cost of sales, so that is purchases. So the purchases were 500 at 150. So let's record this also. So 500 at 150 pounds. So that was equal to 75,000 pounds. Okay. So 75,000 pounds. Out of that, 10 units were returned as faulty. So so the business had to return 10 of them, 150, worth 150 pounds. So less purchase returns. Okay, so less 1500. Now let's find the what is the value of the closing inventory that's left with the business. So we can see that they purchased a total of 500 units, 10 was returned. Okay, so that is equal to 490 units. Out of that they sold 450 units. So that is equal to 40 units will be left, and these will be at the rate of the purchasing price. So 40 times 150 will be the closing value of inventory. That value is going to be equal to 6,000 pounds. Next, cost of sales. So if you add 75,000 minus 1,500 minus 6,000, so that is 67,500. Okay, 67,500. Now this has to be subtracted from the revenue to get the gross profit, but before that there was cash discount allowed and received. So any cash discount which was received by the business becomes an income. Okay, so we have to add any cash discount that was received. So the checks were paid for 60,000 and there was a cash discount they have not given, we have to calculate, but the balance was still owing of 12,800. So you can make a T account to understand this. So you can prepare trade payables, okay, trade payables account. So wherein 75,000 were the purchases, okay, for the year, 75,000, and out of that some were returned. So you will go on the debit side and reduce 1,500, and then out of that towards that business paid 60,000 by check. So you will record that. Then because of they paid, they got a cash discount. Okay, they got a cash discount. This is cash discount received by the business. Okay, cash discount received. And then still 12,800 was owing. Okay, still at the end 12,800 was still owing. So let's write that. So 12,800. So when we add, okay, so we can from this, okay, we can find out that what is the cash discount. So cash discount received will be equal to cash discount okay, received will be equal to 75,000 minus 1,500 minus 60,000, okay, and minus 12,800. So that is equal to 700. So the business got a cash discount which becomes an income. Okay, so that is 700. Now let's add up. Okay, so before that we calculate the gross profit and then add this income. Okay, so let's calculate before that gross profit. Okay, gross profit received was revenue minus the cost of sales, that is 59,250. Okay, 59,250. So is the gross profit. After that gross profit, I'm going to add this other income received. So so you add up, okay, other income. So 59,250 plus 700, it becomes 59,950. 59,950. Okay, this is gross profit plus other income. Now let's calculate the expenses. So the discount allowed was, because the creditors paid back, okay, the business allowed some discount, so that was 4,000. So the business allowed 4,000 worth of discount for the cash payments, okay, by the creditors. Then rent, okay, let's look at the rent. Rent, he says that premises was purchased, okay, the premises was rented at the cost of 3,000 per quarter. So totally 3 times, okay, 4, that is equal to per quarter. So they will have to pay 3,000 times 4. So the rent was 3,000 times 4. In the year it will become 12,000 pounds, but they paid 11,000. So that is the becomes again liability, okay, owable, okay, it is liable, expense is owed at the end. So now here, but the total rent for the year was supposed to be 12,000. Okay, that amount you have to pay right here. Then we can see general expenses of 18,000 was paid by the check, and 800 was prepaid and 630 was owing. So let's calculate the general expenses. So general expenses were, okay, 18,000. Whatever was prepaid you will subtract it, okay, minus 900. Whatever was owing you will add that. So that value becomes equal to 17,730. So let's write that. So it is equal to 17,730. Then we have the wages. So the wages were around, okay, if you see the wages paid to the staff by bank transfer was 16,500. So let's write the wages as 16,500. Okay, so it will be equal to 16,500. 500. Then we have to calculate the depreciation for the fixtures and fittings. So for the fixtures and fittings, we can see that there is a revaluation that has happened. So cost minus the revalued amount will give the depreciation. So they had bought fixtures at 6,300. Okay, they had bought the fixtures at 6,300. So depreciation, okay, calculation. First one is for fixtures and fittings. It will be equal to, they bought it for 6,300 and now it's being valued at 5,000. So which means the depreciation amount is 1,300, okay, for the fixtures and fittings. Now next one is a motor delivery vehicle. So let's write delivery vehicle. Okay, for the delivery vehicle, they had bought at 7,500 minus now the revalued amount is 5,800. So the depreciation is going to be equal to 1,700. So this is the depreciation expenses that was incurred by the business. So fixtures and fittings, it is 1,300 and delivery vehicle, it is 1,700. Now let's add up the total expenses. So 4,000 plus 12,000 plus 17,730 plus 16,500 plus 1,300 plus 1,700. Value of the expense is going to be 53,230. Okay, 53,230. Now the profit for the year will be 59,950 minus 53,230, that is 6,720. So this is the profit for the year.